I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Managing Director and Washington Research Analyst Jeannette Lowe. Jeannette, how are you doing today?
Doing well, Ross. How are you?
I'm good, thanks. I'm good. Obviously, a lot coming out of Washington to start the new year, so a perfect time to talk to you. I think we can start with the kind of back and forth between the Fed and the White House. This has kind of been an ongoing thing, but ramped up in recent days. So I wanted to get your take on what's happening there, and then maybe how you think this impacts the next potential Fed chair or nominations down the road as well.
Yeah, so obviously this year has started off very heavy with a lot of policy changes coming out of Washington. With regard to the Fed, obviously the news that over the weekend that there was a subpoena issued by the Department of Justice for the Federal Reserve, that really kind of put a big flag out from politicians, from investors about what this could mean for the independence of the Fed. The market has somewhat, taken it in stride and understands that there's probably not much coming out of this, but it will have implications for whether or not another Fed nominee from the president is able to get confirmed. And so right now it seems like that is going to be more difficult. It's also going to be more difficult for someone that perhaps the Senate sees as too tied to the Trump administration. So maybe that makes a Kevin Hassett a little bit less likely of a potential nominee. Maybe someone like Waller, who is currently on the Fed, who is more of an institutionalist, might kind of raise his odds of actually being the Fed chair. The other thing that kind of comes into this is obviously now there is a little bit of a fight between Fed Chair Powell and the president. And so there is also an issue that we are kind of being on the lookout for, that Powell's term ends at the end in mid-May, and whether or not if he leaves, he may not want to leave his post, which is one other issue that's coming out of this. He may actually stay on, even though he kind of the administration has pushed to try to have him leave at the end of his term, his chairmanship, rather than the end of his term, which continues for a few more years. But there's also this issue that if there is a vacancy in the Fed chair position after May 15th, what happens? And usually it's the Fed chair, Fed vice chair, who would then become chair. But if there is no Fed vice chair, so if the Fed vice chair resigns, that might mean that the board could actually decide then who becomes the Fed chair. So there's actually a possibility that maybe Powell could even stay on longer as Fed chair. So there's a lot of moving parts with this, but one of the biggest takeaways is it definitely makes it more difficult for Trump's next nominee to be confirmed, and it raises the odds that Powell may stay on the Fed longer than his chairmanship.
That's really, really interesting. Obviously, a counterintuitive to maybe what you would think when you first saw the headline. This is all, I think, in service of a broader push to making things cheaper for consumers, right? The president and the administration want interest rates down to make things more affordable. They've also floated a couple other policy proposals in recent days, a cap on credit card interest rates, and pushing for Fannie and Freddie to buy mortgage bonds and push mortgage rates down to make housing more affordable. What do you make of those two proposals, their viability, the potential that they might actually turn into real policy in 2026?
Yeah, so let me just start with the fact that obviously we're going to see a lot more of these types of proposals this year. The president has now kind of taken on the affordability issue quite a bit and is trying to focus on what he's going to do with regards to housing, what he's going to do with regards to healthcare affordability, even energy prices. So this is all going to be part of a larger story. But with regard to the credit card piece in particular, obviously, that does speak to the affordability issue. It's been something that some members of Congress have raised in the past. We really think it was much more tied, though, to the crypto market structure bill that was trying to move through the Senate. And there was a fight between the crypto exchanges and the banks were holding up the bill from moving forward. And it seemed like this was a way for the president to get banks to actually get this bill moving. The Speaker of the House has actually come out and says that he does not support capping interest rates at 10% because there could be some external effects from this. So that kind of pulls that away. But you're going to continue to see other proposals like this. With regard to housing, there's probably going to be a number of proposals that'll be suggested. Our point is that there's one main thing that you need to focus on, which is like, how do you impact mortgage rates? And there are two ways that the president can do this. One is through financial deregulation, which the Fed will be taking up this year. And the second is with the GSEs, Fannie and Freddie, increasing their purchases of mortgage-backed securities. So obviously, the fact that we've had already one announcement of the 200 billion that partially offsets what the Fed has also been taking off its balance sheet. So it's a little bit of a, kind of a status quo to some extent. But if there continues to be more mortgage-backed security purchases, that can really have an impact on mortgage rates longer term.
That's really good info, and I think really useful as we kind of try to navigate some of the new potential policy proposals from the administration. The final thing that I want to hit on is we're anticipating this Supreme Court ruling on the administration's use of IEPA to levy tariffs. I think the anticipation is that the Supreme Court will rule against that in some fashion. And so that opens up the door to what happens to the tariffs that have been collected. Are there refunds? How do corporations apply for those? What is the process? Does that inject some stimulus into the economy? What is your take on that?
Right. So this is something that obviously everyone's been watching quite closely. They thought a decision may have come out January 9th last week, and then also earlier this week. But this is something that obviously is going to be really important. First, what the decision is, and then to your point, what happens with the refunds. The one big thing is that there may be actually still quite a bit of uncertainty once we get a decision. So let's just say that the Supreme Court does rule against the tariffs. There's a number of options that they could take. So they could remand the decision for what to do with the rebates back to a lower court. So that would leave this issue kind of hanging out there for a little bit longer. They also could say that we have to kind of see if will they put a process in place? Will a process need to be negotiated? Will they say that there should be refunds for everyone who is party to the litigation? Should there be refunds for everyone? Or then also, would it only be on a going forward basis? Would there actually be a credit system put in place? So there's definitely still a lot of unknowns, even if most people are kind of thinking that the tariffs will be overturned. And because they could actually remand this to the lower court, there's also some risk there actually could be even more uncertainty once we get the decision about what will actually be done about the refunds. But we're still on the watch for this one.
Yeah, and I think importantly, we might not know what happens if there are refunds, but as you all have argued in previous pieces and on this video series, that the administration has other pathways to put most of these tariffs back in place that would hold up better in a court of law. So the tariff rate might not change all that much, but it could be a clunky process to get there. So Jeannette,
And
thank
one
you so
other
Yeah, go
Sorry,
ahead.
one other thing I would add too is that even if there are companies that are anticipating that there could be these refunds, this would not be an easy process. So this might take up to a year, potentially for some of these refunds to actually get out to individuals. So it wouldn't necessarily be something that would happen, with the snap of your fingers and all of a sudden these refunds would come back out.
Yeah, which is important when we're considering how it might impact the economy and corporate profits, especially for 2026. So, Jeannette, this has been super insightful. Thank you so much for the time as always, and we'll look forward to talking to you again soon.
Awesome. Thank you so much.